Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. This one we're going to do metal swapping. There's a thing that we do, it's called metal swapping, which we take precious metals, we buy the physical metals, and then we swap them between each other to increase our holdings, our physical holdings. It's called ratios. We use the ratios for the swapping. Under certain market conditions, some metals outperform other metals. So usually when precious metals are in favor, gold, platinum, and silver usually outperform kind of at the same time. I would say platinum outperforms a little bit before gold and silver. Gold and silver kind of lagged in the commodity bull market. So platinum is usually the good one to own in the beginning of a commodity bull market. That's kind of my opinion and the way I look at it, but they usually all go up roughly at the same time. The oddball one is usually palladium. Palladium usually goes up when the stock market goes up, when car sales are good and all that stuff. So that's the one that's kind of offsets the others. And rhodium kind of does its own thing, but it's more closely related to palladium. And I don't have any rhodium in here. Rhodium is overpriced to everything, so I didn't really do anything there. It's also very hard to get and very hard to find dealers to swap it with. But I've got the platinum, I have gold, platinum, palladium, and silver. Those are the ones I'm looking at. Now, how this game works is, and I've got it down here. This is how it works, just to go through it and refresh people and their. So I have a platinum to palladium ratio. I'm only swapping platinum and palladium. I'm not using all of the metals at my disposal. I'm just using this as an example. I'm going to say if you buy, this is the platinum to palladium ratio, which means that when it's low, platinum is good to buy. And when it's high, palladium is good to buy. So if you buy a bunch of platinum in the year 2000, and let's just use the ratio of 1, even though it got below 1, but let's use it at 1, and you buy 10 ounces of platinum, just as an example. So you have 10 ounces of platinum. You ride it all the way up, and you hit the ratio, and I'm just going to use this one at 5. Makes the numbers very easy, but it's around 5 in this range here. And you swap your platinum for palladium. So at a 5-to-1 ratio, and you have 10 ounces, you have 50 ounces of palladium up here. And you ride the ratio all the way back down, and let's say you swap it at 0.5. 0.5 is where it is today, roughly. You'd have 50 ounces, so it would be 100 ounces of platinum is what you would have if you had swapped at a 0.5 ratio. You went from 10 ounces of platinum all the way to 100 ounces of platinum in a 20-year time frame. You 10x'd your physical ounces holdings in this ratio game from, and it's about, we'll call it about a 20-year time period. So that is incredible returns for your physical metal holdings. Now, to give you an example, though, that is an increase of 10 times your actual purchasing power return. Because if you multiplied it and did it in dollar terms, it would be far higher. It's not just a 10x, it would be far higher than a 10x because the platinum price in the year 2000 was far lower than the platinum price is today. And actually, is that actually a true statement? I believe it is. And so I'm going to look that up just for purposes. So I'm pulling this up. We're going to go to stock charts, dollar platinum. We're going to do a weekly. I don't know if actually, let me do this. Platinum price 2000. Because we know it's roughly $1,000 today. So the platinum price, the average closing price of 2000 was $544. So if we were to take that, we have a 10x gain. We have a 10x gain on our physical metals. It's at 1,022 today, roughly, divided by 544. We have another 1.8, so times 10. We have a 18.78 times our dollar value. So in this scenario, in over 20 years, and you could even better this if you bought the bottom of the bottom towards the bottom of the bottom, but let's just take the averages. We went from 1 to 5 to 0.5. And I would have swapped recently. I swapped mine at 0.34, my palladium to platinum. I actually did the swap, 0.34. But you did an 18.8 times your money in dollar terms. Because I know I say a 10x, and people's like, oh, 10x. And then you compare it to other things that are dollar terms. Dollar terms, it's 18.8 times your money in a 20-year time frame. What else has gone up 18.78 times their money? Chipotle, which is one of the best performing companies, it's at like 1,800 divided by 54. That did a 33 times. It's rare to find these, and that did it in about a 15-year time frame. So the metal swapping game is a very low risk way to play something because you're protected from deflation and inflation, and you can swap and increase your metals. And this is something that I play. And some of these, the returns are even better than what I just did, because what you can do is you can use the entire, we'll call it all of the metals. You can use all of them and swap them more frequently and to increase. So you might go from platinum to palladium, and then palladium to rhodium, and then rhodium to palladium back, or however these things go, cycling faster and increasing your ounces quicker. So an 18x over a 20-year period could be far greater. And I did an example before from the year 2000 using all of the metals. And what I did is I chose the best metals to swap into. I turned $10,000, and I think I turned it into $6 million in a 20-year time frame. So today, we're going to look at what are the best metals to be purchasing for today. What are the best ones? What are the cheapest metals? So for this metal swapping game. So let's jump in, and I'll get you what I think are probably the best valued metals. Now, here's the gold to silver ratio. The ratio peaked at about over 100 in early 2020. If you guys were paying attention, you should have been buying the heck out of silver in the early 2020s. That's incredible value, incredible value. And we're coming and compressing the ratio down. Now, looking at the trend line, we broke this trend line to the downside. And what that means is that silver is outperforming gold and that we are compressing lower. So I think that we are entering a potential bull market eventually, not yet, but eventually, where this ratio is going to compress dramatically. And if you look at the last one here, 07, 08, it kind of came up when we had that crash, and then it compressed a ton all the way to about 30. So I think that'll happen. I don't know if it's primed yet, but it will eventually compress quite a bit. So silver's of good value against gold. Here's the gold to palladium ratio, and what we're looking at is we're looking at gold to see if it's any good. What I see here is that gold would be a better buy than palladium. We come here, we roll down, and you can see the downtrend line break, which means that I would prefer to buy gold over palladium. Palladium is expensive. We broke the upside here, which means gold is outperforming palladium. We're seeing a shift of, I would say, the regular general stock market. When the general stock market outperforms, usually palladium does pretty well. Gold is outperforming palladium right now, so I think the general overall stock market is going to come under pressure soon. We've got gold to platinum here. Platinum is at incredible values in terms of how cheap it is. Usually platinum earns a 20% premium to gold. And right now, gold's earning the premium. Gold could buy 2 ounces of platinum. And I actually swapped my metals in here. Not all of them, but some of my gold for platinum, and I increased my ounces of platinum. Platinum broke to the downside. We're coming back to do a retest, and then I think we're going to break and really start to compress this ratio. Hopefully that's what I'm looking for. And Platinum is, I think, of great value in relationship to gold. It is undeniably of great value right now. And it's broken the uptrend line to compress down, hopefully. The platinum to gold ratio or gold to platinum ratio, whenever platinum outperforms gold, it also means that the stock market's going to come under pressure. That's what that ratio means. Because when platinum goes up, we're in an inflationary environment. Platinum is more of an inflation hedge than gold. And that when inflation comes, platinum will outperform gold itself. So everything's in check. Now here's the platinum to silver ratio. I would consider these two metals to be the cheapest metals. We are looking for what these are doing here on a break. And there's the downtrend line. What I think will happen, I think in the short to medium term, that platinum will outperform silver. That's kind of my take. Platinum is more of an inflation hedge than silver is. And usually in the beginning of bull markets, we're going to see platinum outperform silver. I think we're going to see a big move up for this ratio, hopefully, and hopefully we get all the way up to 130. What that means is that you can buy platinum at 40. 1 ounce can buy 42 ounces of silver, platinum can. And if it compresses all the way up to 130, that you can buy roughly 3 times the amount of silver when you do your swap. So if you buy platinum today and you swap it, if this gets all the way back up to this area at the end of a commodity bull market, that you could get 3 times the amount of silver. So buying today means that you could buy 3 times the amount of silver later if you buy platinum. That's kind of how I'm looking at it. Now, again, I could be wrong. This ratio may not compress that much. It may not compress at all, and maybe we stay in this downtrend and silver takes off because we have monetary problems. So what I do is I buy both because silver is cheap to all the other metals and platinum's cheap to silver. I try to balance it out because if we do have a monetary problem, I think silver, I know silver is going to perform well in a monetary problem. I know gold will too. So I own a little bit of gold. I own a little bit of silver just in case monetary problems. But historically, platinum hopefully will outperform silver. And I'll swap to silver later on. That's what my plan is. Platinum to palladium. So I had palladium in before. You've got this downtrend line. And what happened is we got really, really low down here. And I swapped my metals in 2020 because the platinum price was incredibly cheap. The ratio was good. And you want to swap when they're the cheapest because your premiums will be the cheapest. And the premiums were absolutely nothing on platinum. So I swapped my palladium for platinum at the dealer at this time here. And we're moving on up. We broke the downtrend line. It's looking good. We did a little bit of a retest, backtest. And we're moving on up, and we have to break this high right here to be in an uptrend, a new uptrend line, which means that platinum will be outperforming palladium. Will I think it's outperform it? I think it will because we're in an inflationary environment at the moment, and I think it's going to continue. And I think platinum will probably outperform palladium. And we're about almost at a new uptrend. And platinum does very well under inflationary periods, and I don't see why they wouldn't be swapping some platinum for palladium in terms of substitutions in catalytic converters and other areas where possible. So that makes sense on all fronts. And this is at a ratio which is incredibly low, which means platinum is incredibly cheap in relationship to palladium. I don't think it's ever been this low, and it's still at 0.5. That's what I used for that ratio swap. And here's the palladium to silver ratio. Silver is going to outperform palladium. Palladium does not look good at all in any of the metals. It is expensive and it's underperforming all of them. It breaks this line here to the downside. You're going to see a vast outperformance of silver in relationship to palladium. So I think you're going to see a huge compression all the way back down to probably like a 20 or below. We could even see 10 or below. And what that means is if you could ride silver, swap your palladium up here, and I almost did that, at 140, 160, somewhere in there, and you would ride it all the way down to 10, you could get 14, 15 times your metal. That is incredible leverage. So what you want to do is you want to look at these, and palladium's one that is very good for swapping with because you get these large swings in history. And the palladium to silver ratio is one that I would definitely be watching. I think we're going to see a big compression down where silver outperforms palladium quite substantially in this next bull market. So that's what we have for this swapping game. What would I be swapping into and buying today? I think silver and platinum are the two that I like the most. Again, these ratios don't swap, they don't turn super fast, but over a 5 to 10 year period, and depending on which ones perform the best, you can get huge returns. This palladium to silver ratio, if silver outperforms and gets all the way down to like a 10 versus a 150, that's 15 times increase in purchasing power. And I'm talking purchasing power, not dollar terms. Your dollar terms go up even more than that, because the dollar's out of this mix. You have no deflation, inflation risk. All you're looking at is ratios and increasing your ounces. Your ounces increases in dollar terms will be far greater than what I'm talking about. So if you get a 15x on your silver, now here's something. If you do a silver to palladium game and you ride it, and let's say we did it from 2009, and let's say it's at a 10 to 1 ratio. So at the bottom, let's say I'm going to do one cycle up and down. So at a 1 to 10 ratio, you have 10 ounces of palladium. In 2009 is where you bought at the bottom. At the bottom there, I think it was at like about $177, $200 an ounce, something like that. But let's say you got 10 ounces to make this easy, and you swapped it at 150. So 10 ounces times 150, you have 1,500 ounces. You drive it all the way back down to a 10 ratio. You divide it by 10, you have 150 ounces of palladium. That's from 10. So divided by 10, you had a 15x of your metal. If you have palladium, and let's say palladium is still somewhat expensive. Let's say it's $1,000. That way it gets cut in half from where it's at today. It's because it's around 2,000-ish right now. So let's say it's at $1,000, and it was at 177. So you have a 15x. You have 1,000 divided by 177. That's 5.6 times 15. You did 84 times your money. 84, and this is just swapping between silver and palladium. 84 times your money. Why do you think I own so much physical metals and do this game? I don't know anything that's returned that amount in the regular world. Now, if you did rhodium, it blows everything out of the water then. So these ratios have incredible value for increasing your purchasing power. In fact, it has more value than anything else that I know. So why do you think I own all of these metals? Why do I overweight them? You can obviously have very good returns in some other commodities because they're so volatile, like oil, like uranium. And when they take off, the mining companies are massively leveraged. You can see some huge gains. So the way that I view these is when you look at some of these ratios in the physical metal, you have to find returns that are greater than this to beat it. Otherwise, if you can't beat this, why would you invest in the stock market at all? I don't invest in the stock market. I go in the physical precious metals, and then I look for some of these commodity companies because commodity companies can kill it. So what am I doing? What are the best ones? Platinum right now. Platinum and silver. I think platinum will probably be the one that outperforms in the near term. That's my take. That's why I continue to buy platinum. I'm continuing to load up on platinum for myself. Again, please don't use this as advice. It's just my financial opinion. I'm stating what I'm doing. But I'm buying and holding platinum. I'm doing this ratio swapping game. And if we see a vast outperformance, what I'd be looking to swap into is probably silver next. And silver at the end when they do a reflation. So usually when silver does very well, I'm talking very well, it's when you have inflation, we have a problem, and then they're going to reinflate that money printing, like in 2009. And if we get it again at the back end of this real estate, we'll get a real estate bubble. It's going to be massive, probably 5 to 10 years out. Then silver's going to revalue itself a ton at that time frame. So you'll see platinum go up. You could swap to silver. Silver will crash, and then it'll just rocket higher. Or you can go to cash, wait for the crash, and then buy into silver super cheap, and then silver is going to rocket higher. But that's kind of my guess. There's also supply demand in silver. which means that silver could buck that trend because silver is getting more rare. And we're using it in all of these electric vehicles and renewables. So I also own silver, even irrespective of what history's kind of told me, just in case the supply demand in the industrial side drives it higher. So I own both. And I'm actually more overweighted in silver than platinum at the moment, but I continue to purchase and cost average into platinum. That's where I've been buying. 84 times your money in terms of dollar terms. And that's over since 2009. Incredible value. I don't know anything where you almost get 100x of your money in that time frame with the risk being this low. So silver's a cheap, platinum's a cheap. And if you guys want to do this ratio metal swapping game, again, these things they don't happen fast. And I go over these and do an update every once in a while. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.